Hello again, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 17th of February 2023. First chart is the US dollar index futures. As you can see, this market's been up for 3 weeks in a row now, and it's starting to put a little bit of pressure on some of the associated markets. We'll put some lines in pretty quickly so you can see the chart come alive. This is marking all the uptrends. These are the breakout lines. This is the highs of the range and where supply was originally drawn out at the highs. This was the breakdown. This was the breakdown bar. Now we're marking the breakdowns rather than the breakouts. That's the current breakdown line, and the lows would be here. You can see the market's been up for 3 weeks in a row, and it's challenged this breakdown line this week. It wasn't a particularly strong challenge. Price just floated up over the line, and the expected resistance or the supply being drawn out from the left just knocked price down to finish at the logical level, which is right at the breakdown line. This is the old breakdown line, and a push back above that is always a significant recovery. A push above it like this, you'll often see the market test for supply, test the strength of the breakout. This is effectively changing a breakdown line into a breakout line. Whether or not it actually occurs or not, we'll have to wait and see. Quite often price will fail at these levels and come back and retest the lows of their range before there's any actual push back above the level. So there's no guarantee price will overcome this breakdown line at the moment. We'll just have to wait and see. But there's no doubt the strength in the US dollar is actually causing some of the associated markets to feel a bit of pressure, and they're being forced to either move lower in response or attempt to absorb the strength in this market. Next chart is the E-mini S&P. This is S&P 500 index futures, and there was the important breakdown line. Price tried to recover here and was unable to do so. The price actually did break down. Over here was where some buying support emerged, and that's what's been the underlying strength in this market as it's moved up, tested the breakout here, and then now it's moving up again, and it's going to challenge this level by the looks. Now, the interesting thing is the last 2 weeks, this market has been attempting to absorb the strength that we've seen in the US dollar. Often this market will come back in response to strength in the US dollar, but this market has gone sideways, and it's traded easily, comfortably within the range of this up bar, this stronger up bar on higher volume. See the higher volume down there? This market is being very resilient, and it's attempting to absorb the strength in the associated market, and it's doing a pretty good job at the moment. And if there was to be a pause in the strength in the US dollar, that would probably allow this market the opportunity to push higher in response. If there's ongoing strength in the US dollar, it may eventually wear down this market and force it to move lower, but it's doing so reluctantly at the moment. It's certainly not moving lower freely and easily. And the next level is probably there, the highs of this bar here. So there's an important level there and the lows of this bar. So you got a little zone in there, just around the 4,000 level. I'll put a little square around that. There's probably some buying support going to be found if the market is forced to push lower with ongoing strength in the US dollar. At the moment, I'm leaning towards the upside, mostly because this market is putting in a strong effort to absorb the strength in the US dollar, and that means at some point the US dollar may come back a little bit or pause in its rise, and that'll offer the opportunity for this market to move higher in response. is the US Treasury 10-year note futures. You can see the contrast in this market compared to the E-mini. The E-mini, the last two bars have gone exactly sideways and have absorbed the majority of the strength in the US dollar. And this market, the last two bars, have traded lower and weren't able to absorb that strength at all. In fact, price is only just holding on at the lows of the range, and a breakdown below this level will probably see the market come back to 110, I imagine, and test it for strength. So this market isn't resilient at all compared to the E-mini S&P, although it must be said there was a little bit of absorption going on here, and the market did defend against an actual breakdown. So all is not lost. You may find this market test for supply next week, particularly if the US dollar does come back early in the week and test for supply itself after it pulled back a little bit from the highs. That would offer this market the opportunity to also test for supply, and if supply is low, there may be a little springboard higher there. Copper price futures. Copper price futures have had increasing volumes over the last few weeks. We've got buying support here. Here was the initial consolidation, and then a secondary consolidation here. This is the highs of the range through here. To the left, we've got old resistance there, and then here. And this market has been consolidating over the last couple of weeks. It did move higher this week, which was admirable considering the strength in the US dollar would be headwinds in this market. But look at the effort. Look at the volume down here. Volume is activity or effort, and a huge effort was having to be put in to get a modest rise in price. And that's because this market was facing headwinds from the strength in the US dollar. It also confirms what we suggested last week was buying support that came in 2 weeks ago. Very narrow spread down bar on high volume. This was buying support come in, and this week was the response to that buying support. Price did move higher. It would have had a wider spread on that amount of volume if there wasn't such headwinds being created by the strength in the US dollar. But the push higher all the same does suggest this market is attempting to build strength and continue. And any pause in the strength of the US dollar will allow this market to move higher more freely. Now, there's no doubt that some supply was being drawn out, so there may be an early test for supply next week, like this. And then if supply is found to be low, and particularly if the US dollar pauses for a period, early in the week particularly, that may allow this market the opportunity to move higher, and the obvious level is 425 at the moment. Gold price futures suffered a little bit this week in response to the strength in the US dollar. This market, similar to the copper price futures, have buying support in the background, and then a push higher. There's consolidation and a period of absorption as price moved above this old breakdown line. Nice little gap out to show intent, and then a push higher to contend with this level, which is a breakout to all new highs really. Essentially, the 3 weeks of rises in the US dollar have caused price to move lower. You can see that last week and this week, prices reluctantly moved lower on reducing volumes or below average volumes. Below average 2 weeks ago and just fractionally below average this week, with the close off the weekly lows on a slight increase in volume, suggests that some buying support has come in at that level, and it's adjacent to that little gap, and gaps should be treated as a pivot in themselves. So that was probably a good reason to see why buying support came in there. And if there is a pause in the US dollar trading, albeit briefly, you may see price pop back up in response. But this market was attempting to be resilient in response to the strength in the US dollar. And silver price futures were doing a similar thing, really. We'll just mark the chart up quickly. You've got the buying support in here, a push higher in response, a period of consolidation, a secondary push higher. You have overhead resistance at this level, and price has been bumping up against this level for a while, and there was probably some profit taking going on during that period as well. Price broke down on this bar, and there's likely to be some support coming from this congestion zone to the left, and price dipped into that this week. Volume reduced slightly, but still remains slightly above average, but spread was very narrow again. This is the market attempting to absorb the strength in the US dollar, and it's not going down freely and easily. It's resisting the efforts to move lower. It's facing the headwinds and attempting to absorb the strength in the US dollar. And it's doing a pretty good job, really. This is light crude price futures, and we'll mark the chart up quickly. Here's the lows of the original trading range and the breakdown bar. Price attempted to hold on at that level, but broke down again. But buying support came in almost immediately, and price moved up, but wasn't able to move above this lows of the original trading range, which formed the original breakdown line. There was a secondary attempt here before price broke down a second time here. And since then, buying support's come in pretty much level with the $70 level. And every time there's been a down bar, price has responded positively each time. So we'll see what happens this week. It was a much narrower down bar this week on an increase in volume. So there is still buying support in this market, but you may find that there's a test for supply first early, something like this. And if supply is found to be low, price may attempt to push up to the highs of the range. The range is sort of between $70 and $82. And it seems pretty comfortable in this range at the moment. There's definitely resistance above, and there's support below, which comes from the left over here. So I'm expecting this market will continue to trade roughly sideways between 70 and 82, at least in the near term. Aussie dollar currency futures. We've got some breakdowns in the background over here and buying support coming in through here. There was a period of bullish absorption while there was some weakness in the US dollar through there. If we mark the highs of that range, you can see that price has moved lower for the last 3 weeks while the US dollar has had strength showing. So almost the exact inverse opposite to the US dollar's strength. This market has shown weakness. I'm expecting this market to find some support above 68 and some resistance above 70. So I'm expecting this market to trade roughly sideways through this little gap here, and it will continue to trade the inverse of the US dollar to a fair extent. Bitcoin futures. Bitcoin futures accelerated higher this week and pretty much up to the highs of this range, which I expect form a pretty important breakout line, really. It's a fraction above 25,000, but we can call it 25,000 for round figures. And we can call this all an accumulation zone. I expect that's what it was going to be, and this was a hiccup in the middle with the issues that emerged, which caused price to accelerate lower, albeit briefly. The buying support continued within this zone. We pointed it out at the time, particularly on this bar with the high volume, and then on this bar with the high volume. And prices responded pretty much as you would expect, and the market has traded really consistently. It's moved back above this bar's high. It's come back. It's tested the breakout above that level for strength. It's found strength this week and moved higher in response. So that's trading very nicely, quite understandable. And I expect this market may attempt to test for supply like this early in the week. And if supply is found to be low, that is, selling pressure is found to be low, the market may attempt to challenge this level next week. If supply is found to be high, you may find that the market has a slightly deeper test and challenges those sellers. Just back to the US dollar index futures quickly. This market is so important to many of the associated markets. I always try to close on this market because what happens in this market plays a strong part in what happens across many of these associated markets that I cover in this. You might note that I don't mark this low here, I mark this low, and it's because this was a Christmas low. It's very low volume and it was less important. There is probably a line that comes through here like this, but this is the serious level here, and you can see that was confirmed this week by price pushing above and then being forced back down, at least to some extent, to close back at this level. This was a low volume fluff, you might say, and this is the proper breakdown line here. Price just dipped below fractionally, attempted to recover there, tried to hold on, and then broke down again there. Now, this market is likely to test for supply early. I know I say it all the time, but that's because these markets all test for supply. There was an attempt to challenge this breakdown line and break out above it this week, and it's failed to some extent, at least for this week, and volume did increase. It wasn't excessive, so you'll probably find a test for supply early in the week, and as price comes down and then recovers a bit higher, you'll probably find the associated markets will all push higher in response. And then, depending on what happens, how much supply is drawn out, will then depend on which way this market and therefore those other associated markets also move. They all have their own fundamental reasons for moving, but this market creates headwinds and tailwinds for those associated markets. I would expect a test for supply early and then a response depending on how much supply is drawn out. And if there is a bit of selling pressure, price will pull back a little bit, challenge the sellers, and that'll allow those other markets, those other associated markets, just to move a bit higher before this market then recovers and has a secondary challenge to this breakdown line. Okay, that's my lot. Thanks for your time. See ya.